Walk us through how you see what we've seen coming out of the United States specifically impacting Asian markets, because at the end of the day, this is something that's going to have a global implication.
Sure. Well, I mean, I guess over the last 2 weeks, we saw, an enormously aggressive fiscal and monetary policy response, not just from the US, but from, nearly all of the G20 nations. And that helped the markets pick up. We had a really good rally in the S&P, almost, I think, a 20% rally from Tuesday's low last week. We've had, the 10-year bond yield has come back under 1%. Investment grade credit spreads have narrowed. This is all good news. But the problem is that, there are a couple of things that are really troubling the market. The first thing is that we still don't know what the economic consequences of COVID-19 are going to be. Last Friday, we had a couple of the big US houses dramatically lowering their earnings forecast for the S&P, in some cases down by 25% or more. We had a number of firms lower their economic forecasts. Moody's would be a good example. They're now forecasting -2% GDP growth in the US this year. Those economic forecasts, just the real economic consequences of COVID-19 kind of are now starting, I think, to weigh on the market. I think what we've seen is that although the stock market rallied nicely last week, implied volatility, which is normally measured by the VIX index, stayed very high at nearly 60%. In the past, whenever you've had a strong rally in stocks combined with a very high reading on the VIX that has refused to fall, it's always been a bear market rally. So I think what we should expect is that the US equity market's going to fall back from the highs that we had last week. It probably will retest the lows, maybe even make new lows. And I think what is going to be very important to watch over the next week or so is to see whether or not people retain their confidence that the Fed has the situation under control. One of the things that we noticed over the last 2 weeks is that key funding markets, US dollar funding markets, have remained stressed. A good example of that would be the offshore US dollar market. The LIBOR, 3-month LIBOR rate, has nearly doubled since the second week of March, and it was rising all through last week as equity markets were rallying. So there's a lot of funding pressure outside of the US that the Fed, even though they've pumped more than $1 trillion, into monetizing markets, the liquidity injection hasn't really helped, and I think that's going to resurface as a major concern this week. So I don't think we're through the worst of it just yet. We've probably got, a little bit further to go.